Hello, finance enthusiasts! Welcome back to today's Finance News, your absolute go-to channel for everything moving the financial markets. Today, we are bringing you 3 jam-packed breaking updates about United States of America finance that hit the headlines just a few hours ago. We have condensed the absolute most critical data into one fast-paced, high-energy briefing so you can stay in the loop without getting bored. Before we dive into the raw numbers, if you are new to the channel, do not forget to hit that like button and subscribe right now. Update 1. The massive index shockwave. Why Elon Musk's space exploration technologies is rattling Wall Street right now. Space Exploration Technologies Corporation, better known as SpaceX, has officially joined the prestigious National Association of Securities Dealers Automated Quotations 100 Index. This structural shift legally forces every passive investment vehicle and exchange-traded fund tracking the index to immediately buy up shares. While this mechanical catalyst usually sends stock prices skyrocketing, the reality on Wall Street has been a sudden twist, with the stock price actively declining over the past few days. The one-time buying frenzy from passive index funds has already occurred, meaning the stock is back to trading purely on its own merits. A major red flag for investors is that the company is currently trading completely below its initial debut price of $150 per share. Bears view this drop as proof that the initial public offering hype has died down, signaling further corrections ahead, while ultra bulls view it as a prime buying opportunity. Looking at the raw numbers, the valuation is incredibly steep. Space Exploration Technologies generated $18.7 billion in top-line revenue during 2025, growing at a 33% pace. However, at a massive market capitalization of $1.95 trillion, the stock is valued at an astronomical 104 times sales. Because the company is not yet net profitable, it does not even have positive corporate earnings to value the stock against. With sky-high expectations already baked into the price and an impending wall of insider selling pressure arriving as the post-initial public offering lockup period expires over the next year, patient investors may want to sit on the sidelines until the supply and demand dynamics stabilize. Update 2. Forget massive media mergers. Inside Netflix's shocking new secret plan to dominate Hollywood. The world's leading premium streaming service, Netflix, has loved and lost a lot in the corporate matchmaking arena lately. The streaming giant firmly committed to a massive bidding war for Warner Bros. Discovery, only to be outbid at the altar by rival Paramount Skydance. Shortly after, rumors swirled that they were outbid for connected television pioneer Roku following its acquisition by Fox, alongside unconfirmed whispers regarding an interest in Lionsgate Entertainment. These failed whale hunting expeditions, combined with disappointing quarterly financial results and weak forward-looking guidance over their last 4 updates, have triggered a major investor confidence crisis. Netflix stock has suffered a sharp slide, trading down more than 40% over the past single year, leaving recent buyers in severe financial pain. However, corporate redemption might be arriving through a highly strategic small ball game. Industry reports from Variety reveal that Netflix is officially in the running to acquire Letterboxd, a fast-growing film review and social networking platform boasting 30 million global members and a massive 50% year-over-year user growth rate. Letterboxd is seeking a price tag in the $250 million range. Combined with Netflix's recent deal to purchase Radford Studio Center, a historic California production facility, these cost-effective acquisitions allow the streaming giant to scale up physical content creation and hypercharge subscriber engagement without breaking the bank or taking on dangerous corporate debt. Update 3. The 61% space sector crash. Is this deflated supply chain player a golden opportunity or a total financial trap? Shifting our focus to the New York Stock Exchange, space mission component manufacturer Redwire originally went public through a special purpose acquisition company merger back on September 3, 2021, opening at $11.07 per share. The stock reached a breathtaking historic high of $25.90 on May 28, 2026, but has recently crashed down to just $10.18 per share. This represents a staggering 61% pullback from its all-time high. Redwire develops vital navigation, power, and three-dimensional printing hardware for satellites, space stations, and military drone programs, serving elite clients like the National Aeronautics and Space Administration and the United States Department of Defense. However, its financial health is flashing bright red flags. In 2025, revenue grew 10% to $335 million, but net losses nearly doubled to $227 million due to soaring project costs, asset impairments, and stock-based compensation. While analysts estimate revenue could grow at a 26% compound annual growth rate to $664 million by 2028, the structural headwinds are massive. Management recently shocked the market by announcing an at-the-market equity offering to sell up to $500 million in new common stock, creating massive shareholder dilution for a company with a market capitalization of only $2.4 billion. To make matters worse, their independent auditor, KPMG, issued a highly damaging adverse internal controls opinion on their financial reporting. This combination of severe dilution, accounting vulnerabilities, and widening losses makes this speculative supply chain player an incredibly risky bet for disciplined portfolios. There you have it, 3 massive, fast-moving financial updates shaping the markets today. Which of these moves do you think is the biggest game changer? Let us know your predictions in the comments section below. Make sure to smash that like button, subscribe to today's finance news, and turn on all notifications so you never miss a critical market update. Thank you for watching, stay sharp, and we will see you in the next video.